I can't believe it's finally here. Brexit. Article 50 is happening March 29th. I'm going to tell you how to trade it. It's been almost a year since the Brexit vote, and we've been waiting for this. It's entirely expected, and that's what makes it such a tricky thing to trade. There hasn't been a story in the last decade that's been covered more than Brexit and Article 50. Everybody in the UK knows what Article 50 is. If you happen to be the one guy who doesn't know what Article 50 is, it's the clause in the treaty that lets Britain leave the EU. And they're about to do it. Article 50 and Brexit is also the thing that sunk the pound over the past year. It's been quite a spill lower in cable. The thing about Article 50 is everybody knows it's coming. We've known for months that May had planned to do it before the end of March. She's about to do that. We've known since last June that the UK was going to leave the EU. So there's no surprise here. But what makes it so interesting as a trade is the CFTC positioning data. Now that shows futures positioning data. And right now it shows the net sterling short, that's people who are betting against the pound, as the most extreme ever. Now, futures aren't always a perfect match for how the entire market is positioned, but it's a pretty good indication. And what it's saying is that a lot of speculators are betting on a pound decline. Now, if you've been following this as closely as I have, you'll know that Goldman Sachs is out with a note looking at exactly this. And they note that the pound actually performs poorly when specs bet against it. The specs have been right. In a lot of cases, speculators get it wrong, but in whatever 3 or 6 month period they were looking at, the pound tended to decline when specs were short. I think that misses the point because this is a special case for 2 reasons. For one, this is the largest net spec short ever. Well, at least since 1992 when the records began. And number 2 is the timing of the spec short. Half of the position has been taken just in the past 3 weeks. And if you look at a chart of the pound in that time, it's up. And that means that half of these traders are already underwater or are losing money. How much more can they take? The large new spec short position also tells me that these are bets on Article 50. Now, if you'd had these trades for over a year, they'd be comfortably in the money. And you could say it was just a bet on Brexit, a bet on the difficulty of it all. But since they're so recent, that screams to me that this is a bet on Article 50 and the pound falling afterwards. But I just don't see it. It's so expected. This is the most covered news event in the UK in at least a decade. At times, you have these situations where Wall Street or the city might expect a trade, but the public doesn't. And then real money comes in and, you can actually have the consensus being right. But everybody knows about Article 50. On the 29th, you're going to see a headline that Article 50 happened. And you'll say, yes, that's what I thought would happen today. There should be no surprise. There should be no reaction. And yet I think a big part of the market is betting on the reaction. It's not going to come. Or maybe it'll come a little bit. Maybe there'll be some sudden bets. Maybe there'll be some dumb money piling in. Equally likely is that we start to see profit taking on some of these shorts. Or we start to see some of these shorts that are already underwater go, oh, Article 50 isn't making me any money, time to get out of town. What starts as a trickle turns into a flood, and we're talking about a big time short squeeze. All the people who are betting against the pound are going to find out that there's nothing new about Article 50, and they're going to get out of the way, start covering. That's going to push the pound up. Now, they might be able to tolerate 100 pips, 200 pips. When it gets to 300, 400, 500 pips, that's when you really start to see the pain, and that's when you start to see the gains accelerate. So what's my trade for Article 50? Now, if you watch this far, you're probably thinking, I should buy the pound. I'm nervous about that trade. I'm nervous about doing it before the 29th because I want to see how it shakes down, and I really think you can afford to leave the first little bit of the trade on the table because it's going to be a big one. Now, what I think is going to happen is you'll probably get a little bit of a dip when the headlines cross, and then it'll come back, and that's when you'll start to see the short squeeze. If you cover the dip, if it recovers quickly and you start to move up, I think it's off to the races. I think it's 50, 100, 300, 500 pips over the next few weeks as these shorts get squeezed out. Now, some of the things to watch, how the message is delivered. Maybe May bungles it. That could hurt sentiment. I wouldn't really rush in on that. Maybe we get some real fiery rhetoric out of EU politicians. Watch that as well. Barring any of those two things, I just don't see how the pound declines. And what's been a tip-off is the performance over the past couple weeks. Yes, specs have been pouring in, but the pound has been doing all right. Real money isn't selling the pound anymore. There's nothing new here, and I really think it can do better. And at the same time, the US dollar isn't doing particularly well. I don't think I'd want to buy the pound against the euro because the euro is looking pretty solid at the moment, but anywhere else, I think there's a good argument for buying the pound. So good luck on March 29th. I like making this video. If you liked it too, give it a thumbs up, subscribe to our channel, let us know on the website, and thanks so much for watching.